Welcome, future homeowners, to our home buying seminars here today. I'm Taria Miller, licensed realtor with Homes by Jade Realty team. And today, joining me with this home buying seminar is Michael Gates, loan officer with Happy Home Lending.
Hi, everybody. How are you doing?
Well, let's jump into it. I'm super excited to share with you the benefits of home ownership today and all the home buying process entails. So if we can go ahead and go to the slides. All right, next slide. Just introducing us one more time. Again, and these are the benefits of home ownership. So you guys are here today. You already know that being a homeowner is absolutely great, right? So there's a couple of things that come along with that. Just wanted to share with you as well. So of course, we all know about appreciation. Home ownership itself slightly appreciates slightly faster than the going rate of inflation. And if you're here in the Houston area and you bought your home about 5 or 6 years ago, you've also seen how great that appreciation can be because now the Houston area is super popular, it's growing, so your homes have appreciated so much. And not just the appreciation in home itself, you also build equity. So when you're a homeowner, you buy a house, let's say for 100,000, and then sell it 5 years down the line for 200,000. You have built up 100,000 in equity just by being a homeowner and paying your mortgage on time. And we already know one of the other benefits of home ownership is just that sense of community, that sense of ownership and stability that comes along with it. And we don't want to give that back. Along with that comes the happiness, the education that goes into the children and building roots in your community itself. So now that we know all that those benefits that come along with it, let's go into how we become homeowners and talk about the home buying process. Of course, I always say the first step in the home buying process is finding that right real estate agent, and we're definitely going to go over how to do that today. Then we'll talk about Michael Gates, loan officer. We'll talk about how to get pre-qualified for a loan to buy a house, determining how much you can afford. And once you've gotten those two things under your belt, you're off to the races because then you can go out and do all the fun things. And I like to call touring the homes the fun part because I love to look at houses. That's just how great it is. You go out, tour homes, do the fun part, and make an offer, get that offer accepted, and go out there and your good real estate agent will do their job, negotiate that deal for you, get all that due diligence done, and then it's off to the races. You're at the closing table and you sign and you are a brand new homeowner. So I know I went through that super fast. Let's go into a little bit of detail. All right. So the first step in the process, I myself am a realtor, so I'm a little biased. But when it comes to selecting a realtor, you want to definitely pick one that's going to explain to you how the current market works in your home search. So right now in the Houston area, like I said before, it's super popular. So we're in a seller's market. There's a whole bunch of buyers, but not enough houses to go around. But a good real estate agent will definitely look into your situation, what you need, your unique things, and describe to you how they can tackle that market in that area. Houston's a big place. I always say Houston's 1 hour away from Houston. It is huge. So there's different micro markets within Houston. All of Houston is the same. Um, they also look at coming soon and active markets. So I look at what's coming on the market. How can we get more people to come to the market? Something to fit your buying criteria. And then they do the fun part, right? You go out and you look at all these houses, you rank them, you say, I like this house the best. Let's see if we can put that out there, submit an offer, negotiate. And then they work from the time you say go, they're working on ensuring that everything gets done on time so that you can get the closing on time. They work with everybody in that process, the listing agent, the loan officer, the home inspector, and the title company, just to make sure that the whole transaction happens in a timely manner and you got a smooth closing and all the stress is off of you. So that is a realtor's job. It's a mouthful. But when it comes to selecting a realtor, make sure you choose right. And now we're just going to go on to that next part in the process. Once you get a good realtor, you want to go ahead and make sure you get that pre-approval in. And Michael Gates is going to walk us through that.
All right, thank you. I appreciate that. Yeah, like she said, my name is Michael Gates. I'm a loan officer with Happy Home Lending. I'm a mortgage broker, and basically, I work with around 30 banks. So whenever you submit that application to us, have the ability to submit that application to multiple lenders. Now, I know that when I said 30 banks, people may take a step back. I'm only going to pull that credit one time because that credit is going to be good. That credit pull is going to be good for 120 days. All right. So now, once you submit that application, what we're going to do, one second. Once you speak with me, you're gonna complete the application. Then what you're going to do is you're going to upload all your credit and your income documentation, all your asset documentation, like your bank statements and things like that. And then we're going to submit that through what we call our automated underwriting system. Then once it goes through the automated underwriting system, that system is going to give us a decision on if your loan can be approved, and it will outline any conditions that we must satisfy to get a final approval. Now, some people may not be credit worthy or credit ready at the time. And that's what I will do. I will provide them with a free credit repair documentation that will help them or give them like a guideline to where they can get to credit readiness, and get those issues taken care of so that we can move on to that next step in the process. So now you filled out the application, you've uploaded all those documents, and you did get a pre-approval. This is what we need to know. Pre-approvals is just that, it's a pre-approval. So here are a couple of do's and don'ts. You want to continue to save your money. Don't apply for any new credit. Don't quit your job. Don't deposit large amounts of money into your bank account that you can't explain, and then don't run up credit balances. I know once you get that pre-approval, it can be exciting. Just kind of temper it down because we're just in the middle of the process. Because once you get that pre-approval, you're going to go back to your realtor, and then you're going to look for the property. And then once you find that property, then we're going to be on our road to what they call clear to close. So we found the house, we have the purchase contract. Now we're on the road to clear to close. A couple of things to expect. We're going to receive that purchase contract. We're going to order our title commitment from the title company. And basically, they're just going to make sure that all title is clear and everything is good with the property's title. Then we're going to request updated documentation from you. Some updated pay stubs, some updated bank statements. And then we're going to submit all of that over to the lender. And then once the lender gets that, they're going to review that information. We're also going to make sure all disclosures are sent out. We're going to make sure that all disclosures are signed and sent out. And then the underwriter from the lender, they may come back with a few conditions. And basically what conditions are is they're small issues or small questions. So they may have a question about a deposit. They may have a question about an inquiry on the credit report, whatever the case may be. So what we're going to do is we are going to, once we receive those conditions, we're going to get all those conditions taken care of. We're going to write any explanations. We're going to send any updated documentation, and then we're going to order the appraisal while we're doing all that. So we're going to order that appraisal, and then we're going to submit that all those conditions for final approval. And then once we submit all those conditions, the appraisal's done, the title is clear. At that point, it's a happy day. We are clear to close. Now, at that point, everybody's happy, and we're just waiting on that day to sign those final documents. All right. So that's all that I have for right now. I'm going to send it back over to Taria, and she's going to tell you about the remainder of the process.
If you go to the next slide. So while all that is going on in the background, you're getting all the underwriting done with the lender, Michael Gates over there. While we're doing that, right after we submit that offer, we're going to go into, and it's accepted by the seller, we're going to go into what's called a due diligence period. So we're going to go in and we're going to do our due diligence on this brand new home that you got. We're going to do our home inspection. And I recommend a home inspection, whether it's brand spanking new construction or it's a 50-year-old house. To me, it's the same. And we only have about 7 to 10 days to do that home inspection. And basically, it is a visual assessment of all the physical structures within in the house. And the goal is to just uncover issues of home itself. It's completely separate from a home appraisal. It doesn't tell you the value of the home or anything like that, but it does let you know if there are issues in the home. And I say I recommend this whether it's new construction or old construction because I myself and the people that I've known, clients that I've worked with, have gotten new construction homes and there have been, issues, things that you wouldn't think were a big deal, but they become a big deal down the line. For example, got a brand new house, doesn't have rain gutters on it. And you're like, well, I didn't think about it. It was just really pretty. But when it rains, you're going to have a problem, right? Or the HVAC system isn't hooked up in the attic correctly. Those are little things that new builders may forget. But if you go through a home inspection, you can point that out and get that fixed prior to you buying the house, right? So, and then if it's like an older home and it's something that we need to talk to the seller about, a good realtor will negotiate with a real estate agent to make sure that it's fixed so that you guys can come to a good conclusion and still be clear to close. The deal doesn't die. I myself work with a home inspector. I put his name on here, Corey Potts. He's licensed and certified, and he works within all of the greater Houston area. So just wanted to point that out. And I think Michael came, said this as well during the process. A part of going through that underwriting process for the mortgage is doing your home appraisal. Now, this is an actual assessment of the home value. This matters to you, of course, and it matters to the lender, of course, because they don't want you to pay more for a house that's less. So they don't want to give you a loan for something that say you're like, oh, I'll pay $200,000 for it, and you do the appraisal, it's only worth $100,000. That's a waste of money. So that's why we go in and we do that appraisal. And if it does come up short, a good realtor will go back and negotiate with the seller to say, hey, this is what the appraisal came back to. Let's still figure out a way to make it to the closing table. And that's what we'll do. That takes about 10 days to come back, but within like 2 days, we should have the appraisal out there to look at the house. And next slide. So after we get done with the appraisal, we do our due diligence in the home inspection. You've done all the things that you're supposed to do with Michael Gates, the loan officer. You are clear to close. You finally make it to the closing table, and you're like, oh my goodness, what do I have to bring to the closing table? What are my costs? Some of the common costs include escrow fees. A lot of people don't talk about this. This is on top of your mortgage payment. What you will pay is property taxes and insurance. The mortgage company puts that all to the side in escrow and holds it for you and pays it for you every year to ensure that it's paid, because you can lose your house because you don't pay your property taxes. And they want something bad to happen because you skipped the insurance payment. So those are all escrow to the side for you and paid yearly. Of course, the recording and notary fees, title search and title insurance. Michael also hinted at this. This is just to make sure that the chain of title for the property makes sense. So there isn't some random person that says they're owner that comes out the blue and says, well, no, I own this house. You have a good title search going, and then the title company will issue insurance against somebody making claims against your property. Of course, all the underwriting fees from the lender, the appraisal fees that does cost, local transfer taxes if they're applicable, homeowners insurance, we talked about that, and then the home association fees. I will tell you now, there's very rare chance that in the Houston area there's a place without a HOA. Most neighborhoods have HOAs, no matter how old they are. It's kind of weird, but they come with some sort of home ownership fee. For those that are looking in new construction, they also have what's called PIDs or MUDs. That's municipal utility districts. That's pretty much if they're building up a new community, they have to bring in all the utilities. They have to bring in the water, the gas, the electricity. That all costs. And what the builder does is they pass that off to the actual buyer of the property. They pass it off to the buyer, the owner, and they pay MUD or a PID tax for all those things, sidewalks, the whole nine. And that's paid on either a yearly or a monthly basis. It just depends on how it's set up. But that's an additional fee that isn't really talked about that much that you may get surprised with at the closing table. And it can range anywhere from like $500 to $1,500. Just depends on the new community that you're moving into. Those are the coming closing costs. But once you have all that all together, you're good to go. You come to the table with all the money ready to sign at the title company. Um, and that is it for the home buying process. You once you sign that paperwork, you'll be a brand new homeowner. So are there any questions, comments? Do we want to go over something one more time, Michael?
Well, we just really want to stress one of the things that we really want to stress is after the pre-approval, making sure that you stay aware of any credit issues, making sure that you don't. A couple of things. This is a FYI, or just a couple of examples. There have been times when people got a pre-approval and not known that they need to go further in the process and have gone out and tried to purchase a car or have gone out and tried to buy new furniture for the property, things like that. And yeah, that can cause an issue, and that can cause you not to actually get the property because now you have this new debt, and it can affect your debt to income. Now your credit score may not be affected; your credit score may still be the same, and sometimes that can be a delusion. Sometimes because that credit may be disguising some outstanding debt that may hinder you. So just be aware when you get that pre-approval. Just continue to stay diligent in watching your credit and stay diligent and continue to save money because continue to save money just in case there's some unexpected expense that comes up. You just never know what may come up during the buying process. So just continue to make your money, continue to save your money, and if nothing comes up, you just got a nice little stash you got saved up. So
Makes sense. And then, Michael, I did want to ask one quick question. So I did go over all the common closing costs. When it comes to out-of-pocket fees for closing costs, how much do you expect a homeowner should have to pay, or a home buyer would have to pay for closing costs?
Closing costs is going to that's going to change depending on how the sale is negotiated. But when you're looking at closing costs, you're going to look at you want to have a total of about 3% of what the sale is, right? So if whatever you're putting down, just add about 3% to that, and that could cover your closing costs. Because that's usually around what it's going to be. Because for an FHA loan, you only need 3.5 down, and we usually tell people you will want to have about 6.5 to 7% of that sale. Because if you get if we're able to have a 3.5% down payment, then the remainder closing cost is going to be around 3% of that.
Okay.
I know I threw a lot of percentages, but
So,
but yeah, it's all the.
You did mention the FHA loan, and I did want to make people aware of the breadth of loans that are available for people out there. So with the FHA loan, what are some of the really quick, just the eligibility requirements on that particular one?
Well, FHA, as people may or may not know, it's a government-backed loan. There are credit requirements. You would need at least a 580 credit score, but you only need 3.5% down. Now, what happens is when you put 3.5% down, if you put the minimum down, you will be required to pay mortgage insurance. So on an FHA loan, mortgage insurance is for the life of the loan. Now, conventional loans, and I know we were talking about FHA, but conventional loans, real quick, if you put 3% down, or if you put less than 20% down, you will be required for mortgage insurance with a conventional loan as well. But the difference is on a conventional loans, once your loan to value reaches 80%, that mortgage insurance is going to come off versus a FHA loan. Back to FHA loans, FHA loan, your mortgage insurance is going to be on there forever,
Forever.
right? For the life of the loan. But yeah, so but the thing about FHA loans, they're a little bit your credit requirements are a little bit lower. Your down payment, is 3.5%. Your debt to income is a little bit you have a little bit more leeway on your debt to income. So the reason why a lot of people go to because I know people may have the question is, well, if mortgage insurance is going to stay on here, it's going to cause me to have to spend more out of my pocket. Why are people getting FHA loans? The reason why is because the requirement to get an FHA loan is a little bit is not as tight or is not as stringent as a conventional loan. So that's why people go the FHA loan route, because it's an easier loan to get into. Mm-hmm.
So,
and also they have a lot of down payment assistance programs that they can do along with that, but conventional loans do that as well. So
speaking of like down payment assistance, easier loans to get into, one of the other loans that you told me about was one that uses the AMI. Can you talk more about that?
Yeah, that's the conventional loan. That's a 1% down conventional loan. Yeah, that's for homeowners who have at least, and that's with a couple of. That's not with all lenders. This only did with a couple of different lenders. Because some of the basics is you have to have at least a 620 credit score, and then the other part of that is your income cannot be above 80% of the average median income for the area that you live in. For instance, if you live in the Houston area, 80% of the average median income for the Houston area is like $75,000. So if you make around $75,000 or less, or if you have a household income that's $75,000 or less, then you can possibly qualify for the 1% down program for a conventional loan. Now that 1% down is good for up to $4,000. So when you say 1%, it's just up to $4,000. Now, if you purchase a house and the 1% is more than $4,000, they'll still UWM United Wholesale Mortgage will still give you the $4,000 to put toward that. So, but it's another product that if you have the credit but you may not have the income, or if you may not have the down payment, then this is a product that can get you into the home right at this point, where you don't have to wait until you save the money or wait till you get that promotion. You can get it now.
So this particular one, you said down payment assistance up to $4,000, right? Mm-hmm. So, and then I guess if you meet the 80%, how much home does that get you for approximately, if you have no debt and you actually are making $75,000 a year, that would get you about how much home?
Yeah, if you're making about $75,000 a year, you can get around between $225,000 $250,000 is going to be the 1%, and then it's where you're only going to have to put about 2% down, right? So around $225,000 to $250,000, you're only going to have to put down that 1% of that, and they're going to cover, because that $4,000 is going to cover the rest.
And just to say my little piece, $225,000 to $250,000, you will be able to find a good brand new home here in the Houston area. There's about 3 bedrooms, 2 baths, new construction. You definitely can find a lot of non-new construction in that price range. So that's a good price range here in the Houston area. You definitely will be able to find a house with that. I think one more question that I want to hit on, because we have you as a loan officer here, the USDA loan. So there are a few pockets in Houston that definitely, especially down here in South Houston, definitely our USDA area covered. Could you hit on what the USDA loan is and how you're eligible for that?
Yeah, USDA loans are loans that are they're government backed loans that are 100%. Uh, they will do the loan for 100% of the value, right? So what does that mean? That means that's less that you have to come up with up front. So how, whenever anyone is talking about, let me kind of go back a little bit. Whenever anyone's talking about loan to value or down 3% down or whatever the case may be, for instance, say if you have a home that is $100,000, you would, if you got qualified for FHA loan, you would have to put 3.5% down on that. So it's 3.5% of that $100,000 versus a USDA loan, which covers 100% of that. Now they're going to cover the 100% of the $100,000. You don't have to come up with that. The only thing you have to cover on the USDA loan is your closing costs, and there's like a funding fee. So it's like a insurance, escrow insurance. So,
How
yeah,
much is the funding fee? Is it like a percentage of the loan itself, or?
yeah, it's like 1%.
Oh, okay.
Yeah, it's very, very small, but that can be negotiated at usually on a USDA loan. You just want to, it's 100% a loan, so they're gonna loan you 100% if you qualify. Now, going back to what Taria said about the pockets in Houston, if you are looking for homes in the Houston area, if you go south, like to the Fulshire, Richmond, Rosenberg area, those areas, there's areas in there that qualify for USDA loan. Because most time when people say USDA loans, they're thinking about farmland and out in rural areas and things like that. But now some USDA, some areas around the Houston is close to Houston area, maybe a little bit out, maybe a little bit further out, but they're not like in these far away rural places that's out in nowhere, middle of nowhere.
Because we just looked at what Iowa Colony today.
Mm-hmm.
Iowa Colony is right off of 288. If you go straight down 288 past Pearland, it's about 30 minutes straight ride from Houston itself. A little bit closer to the border than that. So if you're looking for a USDA loan, and that one's covered by USDA out in Iowa Colony, it's just one of the areas off the top of my head. And I would be remiss if I don't ask you about this loan before we get off. So I myself am a veteran. I used a VA loan to buy my house. Um, some of the misconceptions about VA loans. So one of the biggest ones is that can you use the VA loan to buy your second home? So I sell this house, I want to go buy another house. Can I use my VA loan again?
Yeah, you can use a VA loan again. So it's not
Okay.
a one. It's not a one shot deal. You can use the VA loan again.
And then as far as qualifications for that, could you just go over like broadly benefits
Yeah,
that you
yeah, absolutely. So we as a mortgage broker, we have loan products that basically can get a veteran qualified credit score as low as 500. So you can have a credit score as low as 500, and you can possibly qualify for a VA loan. VA loans are a little bit for veterans. They're a little bit easier to get into because there's a lot of negotiation going on. Now you do have to do. Um, there is a funding fee with that as well. But if you're 100% disabled, they can waive that funding fee. So if you're 100% disabled and you're looking to buy a house, then you may not have to pay that funding fee, and the only thing you have to come up with is the closing costs. So that does have its benefits. Being well, of course, being a veteran is an awesome, but is awesome. Which I'm a veteran as well. But if you're 100%, then you get that funding fee waived, and you get to put more toward. You can put more towards your house, or you can put more, or you can just use that to pay your closing costs.
so because you credit score is so low, what exactly are you looking at when it comes to people's credit and getting this loan? So you said 500. It's a really low bar, right? But you are looking at some other things as far as their financial ability to afford the house. What exactly is that?
Yeah, you're going to look at one of the things that is not talked about is the debt. So we'll look at your debt um, as well as the credit score. And people who have lower credit scores typically do have a lot more debt because hence that's the lower credit score. But like with a VA loan, it's a little bit, it's not as stringent or tight, I guess you can say, with the guidelines. But the debt to income is going to come into a factor. So one of the things that you would want to do as a potential home buyer is look at all of the things that you're paying on now. And I'm not talking about utilities. I'm just talking about your your credit cards, your personal loans, your car payment, things like that. You want to just add those up and see how much of your income does this take up. So if that's taking up more than 40% of your income, then it may be an issue when you come to purchase a home, right? Because you want to have that to be below 40, those type of that type of debt to be below 40% of your income. And then your with an FHA loan, if you qualify, that's why a lot of people go FHA, because FHA you can go up into the 50s as far as your 50% as far as your debt is concerned.
So you bring up a good point about debt. So say I'm a home buyer, I have worked my butt off and I've saved like $20,000 to go towards my brand new house, but I also got a car payment going on, and my car, pay off my car is probably $10,000. What do you suggest I do with that? Do I keep my car? Do I keep making my payments on time and try to get this house, or do I use some of that down payment towards paying for that car?
Well, it's going to be a case by case situation. Before you pay off the car, um, before you pay off anything, if you're going to buy a house, before you pay off anything, you want to talk to a loan officer, because sometimes it's going to make sense to pay off the car. Sometimes it's going to make sense to pay down the loan. And that's why it's going to be a case by case basis, because some people may need to they may not qualify for as much house. So that $10,000 may be the difference between a $210,000 house that you want and that $200,000 that you qualify for on the loan. So you might have to use that $10,000 as a down payment to pay that down. We may just have to look at other things as far as your credit. And the flip side of that is your you may have everything else. You know what I'm saying? That you got everything in place, the down payment, everything else. Now, I mean, you got enough for the down payment and you have enough to pay this off. Then at that point, it may make sense to pay that off. So it kind of depends. It's all going to be a case by case. But you don't want to carry. You want to carry the least amount of debt as possible when you're going into the home buying process. But before you pay off, speak to two things. Talk to your real estate agent and your loan officer, and two, tell them exactly what's going on. If it's and because it's not like it's not a pass or fail. It's not a well, you can say something that's going to throw everything out of the water. No, just come to your real estate agent, come to your loan officer. This is what my debt is. This is how much money I have. What's the game plan? And then everybody can come up with a game plan, because you may need to pay off some stuff, and you may not, and you may need to hold on to some funds for down payment. So, but yeah, that's what you want to do before you start paying things off. Make sure you speak with the loan officer and the real estate agent to make sure that game plan, that you guys are on the same page. You have that right game plan to get you into the home. Because sometimes, because sometimes people think that they have to pay off more than they actually do. Like there's some debt that they may not have to pay off. They you know, so they may, it may save you money just by speaking to your real estate agent and your loan officer.
It's a good point to make. And I think the last one is so the difference between renting and buying, and then people wanting to kind of get into the same window when they're buying as the same amount that they're paying in rent, they would like to pay in mortgage. So they're really concerned about the interest rate. Can you talk a little bit about like what actually determines the interest rate? I don't. Yeah, let's say it like that. What actually determines the interest rate that you get on your loan, regardless of the loan? I'll say it like that.
Yeah, your credit score is going to determine is going to be the biggest determination of your interest rate, right? That's what's going to start off into the gate, and then next thing is going to be your debt to income may disqualify you from some loan products. But the biggest factor is going to be, well, the first factor. I ain't gonna say the biggest. The first factor that's going to be looked at is that credit score, and then one of the things that when people speak about interest rates are going to go up and down. They're going to one day they're going to look like a supermodel. The next day they're not going to look like a supermodel. So don't fall in love with rates, or don't follow the rates and miss the house. People can follow rates and miss out on the house because they're looking at rates and they're thinking, oh, the rates are going up, so this isn't a good time to buy a house. And then they look around, and then the rates start going down, and then they try to look for the house, but the house is no longer there. So don't look at rates and think that rates are going to be the end all be all, because just when you work with a mortgage broker is going to negotiate your rates anyway. So the rates that you see may not be the rates that you end up with, because a mortgage broker may be able to negotiate rates a little bit lower because they're going to be working with different banks. They're going to be working with different guidelines. So they're going to try to get the lowest rate possible, because and not just me saying this, but the loan officer is not only working for you, they're working for themselves, and they know if they get a lower rate, that's going to be better incentive for them. One, that's going to ensure that they get paid. Two, if I can get you a lower rate, then you're going to tell the people that your friends and family, about the loan officer who helped you out and got you a lower rate, and that you didn't even know about because of what the market was talking about.
Right.
So, yeah.
I do have people that just follow the mortgage rates. So I wanted to make sure I touched on that. Thank you so much for answering all my questions about overall home affordability, and that it is really demystifying the whole mortgage process, because a lot of people are super intimidated when it comes to buying a house and getting a mortgage. It is a big investment, but it's nice to know that a lot of people have a lot of pathways to get in there and buy their home of their dreams and become stable, become a part of the community, and just realize all those benefits of home ownership. So thank you so much for answering those. Did you have any final words as well?
No, I don't have any final words. Basically, I said, no, I don't have any final words. And then I started saying final words. Hold on 1 second. But yeah, so we have Shannon Beasley said that's good information. So appreciate that, Shannon. But yeah, so like I said before, do's and don'ts. Don't when you get that pre-approval, just stay vigilant on your credit and your debt, and then work with a loan officer and a real estate agent that you can actually talk with. The home buying process can be a stressful process, so you want to make sure that you are with someone that you can communicate with. So that's very important when you're looking for a real estate agent. Just someone that you can communicate with, because it is a loan process. It can be frustrating, and you need to be able to vent your frustrations to a real estate agent, and so that they can actually address any issues. Because if they don't know the issues, they can't address it. So That's all I have. But that's all I have.
Thank you so much. And yes, definitely pick the correct real estate agent. I'm gonna say that I'm the best because I'm on here, but definitely pick one that fits you and your personality and how you work. Um, Thank you guys so much for joining us today. I hope you guys learned a lot. If you have any more questions, if you want to set up a home tour, if you just want to sit down and chat and ask specific questions to me or Michael, please just give us a call or hit us up in the email. Our email addresses and phone numbers are right here. Thank you so much.
Yeah, thank everybody for joining. I hope everyone have a nice day.